Good morning, everyone. This is your weekly report on what to look for in earnings season. We are in the second week. I'm going to keep this brief because I've had one person tell me I'm too long. So if you want more information, please ask. CRM has a massive buyback program going on. It doesn't report until uh, early December, so it has plenty of time to push things up. It is a low risk entry right now because it is in a buy zone with some accumulation going on with the dark pools. They will buy as it dips down or moves up. So we have a lot of information that is coming in that is suggesting that the stock may have a better than earnings expectations. It is a long ways out. If you are not in the stocks that are reporting this week, you are late. You need to start looking at stocks 2 to 3 to 4 weeks ahead of their earnings season and decide whether the stock is going to move up or down based on earnings facts that you will find in the stock charts based on what the fundamentals are within the stock chart. Otherwise, you are very late. The sell side controls the buybacks because they are the bank of record, but there is institutional activity in the stock as well. We have the buy side that is supporting the market only if it drops to over 20% below the index values and goes lower. The smaller funds managers are divided. They have no idea what they're going to do. They disagree with each other and they call us all the volatility that is occurring midday. So when there's high volatility, don't blame Wall Street. It's the smaller funds arguing with each other. They're not in agreement, and this is extremely rare. I have not seen it before where they're so deeply divided and one group trying to sell and the other group trying to buy. So there's a great divide there. Professional trading companies are supporting the market as well because they are hired by the buy side institutions to improve their return on investment for the funds holders, the 401k holders, and others that the buy side invest for. So you have a lot of division going on during an earnings season, which is unusual. You need to be way ahead of the earnings. If you wait until the day of the earnings release, you are late in the stock and you will not make as much money as if you get in early and ride the runs up, either the buybacks or the dark pools buying and accumulating ahead of a good earnings season, or the professional trader companies running it up be ahead of the market, and you want to be in with all of those. HFTs are a major problem and you need to be worried about it. They are using AI and it often mistakes or makes a decision because it tries to learn as it moves along, and it makes a lot of mistakes. I'm seeing huge mistakes in AI from the HFTs. The HFTs are the ones who gap it down at market open. There is the 1 minute before the market opens in which all of the orders that the brokers have from the retail side and smaller funds are lit. In that 1 minute, there are milliseconds, 60,000 milliseconds, in which the small funds might get in, or the sell side institutions switch and go and start to sell short and that type of thing. So you need to be aware, because that gap down is not what you want to be trading, or that gap up. You want to be in the stock in the proper position so you can take advantage of the huge gains up or down given on that mistake. But you also have to be aware, if you hold and you think the stock is going to go up and it gaps down, you're going to have a huge loss. It will recover over time, but most of you are day traders, and so you're wanting to get in and out in the day. It's going to be harder because of the millisecond transactions that can whipsaw you out of the trade within 1 minute. So be careful what you do and how you trade. You shouldn't be chasing. Apple right now has a new all-time high. It's got this huge, beautiful big white candle after a gap up. Sell side has been buying back shares of Apple like crazy. It doesn't report until much later in early 10:30 is its estimated report date. So it's got time. It can still do buybacks, but buybacks stop before the week of when that company is going to be reporting. So they always pause those buybacks because they don't want to interfere with the normal activity of the market and get fined or something for trying to manipulate. So they will be doing that. You want to be aware of all this stuff and you want to get in ahead of the earnings season's runs and so on and so forth. So you need to start looking ahead several weeks. That's the end of my topic for today. I'm Martha Stokes. Trade wisely.